Continuation patterns, identifying short-term pauses in main trends. When a market is experiencing strong up or down trend, time and again, prices stop moving in the main trend and start moving sideways on extremely low volumes. This indicates that market is trying to catch its breath before resuming its previous trend. While market is trying to catch its breath before resuming its trend, many a times market form different patterns. In this tutorial, we are going to learn about those patterns. Patterns that are formed when market is taking a breather or a breath in a strong trend. These patterns indicate that sideways price action of the chart is nothing more than pause in prevailing trend. Continuation patterns are usually shorter term in duration when compared to reversal patterns. Following are chart patterns which will be safe to be classified as continuation patterns. First one is triangle. Triangle is one of the most commonly found chart patterns, and second most commonly found chart pattern is flags and pennants. These are also extremely easier to identify. Our third continuation pattern is a rectangle. It is also known as a congestion area or a range bound movement. A fourth chart pattern will be continuation of head and shoulder pattern. Head and shoulder pattern is a strong reversal pattern, but here it is somewhat an inverted head and shoulder pattern, indicating the pattern represented is not a continuation pattern, but is not a reversal pattern, but a continuation pattern. Let's go ahead and learn about our first continuation pattern, which is triangles. First, we'll learn everything about a triangle, and then we'll go ahead and classify triangles into symmetrical, ascending, and descending triangles. A triangle represents a pause in existing trend, after which the original trend is resumed. The minimum requirement for a triangle is 4 reversal points. Remember that it takes 2 points to draw a triangle trend line. Hence, to draw 2 trend lines, it requires at least 4 minimum points. While the minimum requirement is 4 reversal points, sometimes triangle will have 6 reversal points. Many a times, triangles are combined of 3 peaks and 3 throws that combine to form 5 waves within a triangle before the uptrend resumes. Time limit for price breakout. There is a time limit for the resolution of pattern. For the completion of pattern, there is a time limit, and that is a point where two lines meet. The point where the two lines meet, triangles must be formed before reaching that point. As a general rule, prices must break out in the direction of prior trend somewhere between 2/3 to 3/4 of horizontal width of the triangle. This is a very important rule. A triangle to be a valid setup must break out within 65 to 75% area of the triangle. If prices remain within the triangle beyond 3/4 or the 75%, the triangle begins to lose its value and usually means price will continue to drift out to the apex and beyond. So, a triangle to break out, prices to break out of a triangle, there is a time limit. If prices consolidate within triangle beyond that time limit, the triangle loses its value. Therefore, the triangle is an interesting combination of time and price. So the trend line give price boundaries for the pattern formation and time boundaries for completion of pattern. For example, if the width of triangle is 20 weeks, if the triangle is 20 covers a period of 20 weeks, then breakout should take place somewhere between 13th and 15th week. For the setup to be a valid triangle, the breakout must take place somewhere between 13th and 15th week. The actual breakout signal is given when prices close beyond one of the trend line. Sometimes a return move will occur back to penetrated trend line. Once prices break out the trend line, the line itself becomes support or resistance level. This is how a triangle formation looks like. Trend line can be drawn from minimum 2 points for the upper boundary and minimum 2 points for the lower boundary. Once a trend line is drawn, the place where the trend lines meet is the place where triangle completes itself. But the breakout of price out of this congestion period must come somewhere between 65 to 75% of the width of the triangle. So a triangle to be considered as a valid pattern, prices must break out somewhere around 65 to 75% distance of the triangle. Once prices break out of the triangle, after breakout, sometimes prices pull back. When prices pull back, the trend line itself acts as a support zone and prices reverse to make a new high. So the prior trend is resumed after breakout of the prices beyond triangle. Let's learn importance of volume in formation of triangle pattern. Volume should diminish as prices swing narrows within the triangle, as it is observed in every consolidation pattern. Volume starts to decrease once price starts consolidating, but the volume should pick up noticeably at the penetration of trend line that completes the pattern. Once prices break beyond the trend line, volume must pick up considerably. The return move should be on light volume with heavier activity again once trend resumes. So this return move, if prices show or indicate a return move back to the trend line, the move should be on lighter volumes. This is very important. Breakout should be on heavy volumes and return move should be on lighter volumes to validate that the breakout is a valid breakout of the triangle pattern. So once prices enter into a consolidation pattern indicating a triangle, volume must dry up while prices are trading into triangle zone. Prices break beyond the triangle, volume must rise up considerably and increase as prices move upwards. If prices suffer a pullback back to the trend line, then the pullback should be on lighter volumes. Now that we have learned about volumes, let's go and learn about finding price targets. The simplest technique is to measure the height of the vertical line at the widest part of triangle and measure that distance from the breakout point. Other method is to draw a trend line from the top of the base of triangle parallel to the lower trend line. This upper channel line thus becomes upside target in an uptrend. Alright, let's go ahead and take a real chart example about triangle. Following is a chart of CRT Limited for the month of September 2014, and as of the last bar you can see prices have broken out to a new high, huge surge in price with a huge surge in volume. As of the last bar, it looks like prices are pulling back or taking a breath or consolidating before resuming its upward move. Let's go ahead and see what kind of pattern this pullback creates. You can see as prices pull themselves back, volume dries up. So this is one of the characteristics of an uptrend. When trend resumes, volume increases. When trend experiences a pullback, volume dries up. You can see here when prices are moving up, volume tends to increase. Volume tends to show, sorry, it's here. Volume increases when prices move up and volume decreases when prices starts drifting downwards, which means prices are interested to go up rather than going downwards. You can see here this upsurge was supported by a huge upside volume, suggesting that people are more interested for these prices to go upside. Let's go ahead and add some more bars. Now it looks like I have 2 points on the upside. This is point A and B here, and let me add some bars. It looks like I have 2 points on the downside as well. I have point B and C. So this is what it looks like, a kind of triangle. Here is my point A, point B, point C, point T. Now we have enough information to know that prices are going to resume their upside trend once they break out of this consolidation pattern. We have to support our view. We have this upside move. Our other important factors that suggest that prices still have more momentum towards the upside left in them is the fact that even in this within this consolidation, prices are seen surging upwards on heavier volumes, whereas they are coming down on lighter volumes. What does this say? People are not willing to sell it on heavy volume, but they are willing to buy it on heavy volume, which means prices still have upside momentum left in them. So once prices close above the trend line, we can safely assume that our triangle pattern is completed. And as I have said, prices must break out of a triangle somewhere around 75, 65 to 75% of the distance of the triangle. From this point A to here, this is the distance of the triangle. Let's see when prices break out of this triangle. Here we can safely conclude that prices have closed above the trend line and thus prices have broken out of the triangle. Now prices will only surge upside. Alright, now let's go ahead and see at what point did this breakout occur. I will add a timeline here, add 78.6 to it, and you can see prices broke just beyond 78.6% of the width of the triangle, which means prices broke somewhere around 90 or 93%, 85 to 90% of the actual width of the triangle. Never mind, but this triangle holds all other clues that suggest us that there is an upside momentum left in the triangle. You can see prices, the breakout was supported by increase in volume. All these factors suggest that there is an upside momentum left in the triangle. Let's go ahead and add some bars. And you can see prices went up to make a new high. Alright, now we need to know how to define targets. What should be the target? Once prices broke out of this consolidation pattern, what should be our target? There are two ways to project a target. A first wave to project a target, to calculate the distance, the widest range of the triangle here. This is the maximum distance of the triangle plotted from the point of breakout. This is where prices broke out of the trend line. So I plotted from the point of breakout. So this 922.50 becomes our target once prices broke out of the triangle. This is one way to project a target. Alright, take the maximum distance, maximum width of triangle and plot that width upwards from the point of breakout. If it is a bearish triangle, take the maximum width and plot project that width downwards from the point of breakout. Other way to calculate to project price target is to make use of parallel lines. So I'll take parallel lines and draw a line parallel to the lower base of the triangle. Alright, now project that line from the toppest point of the triangle. Point A is the toppest point of the triangle. So I'll project that line from the toppest point of the triangle, that is point A, and then extend it. This is other method of projecting price targets for the triangle. You can see here prices never went to meet the projected score by the parallel line, but nonetheless other method, the previous method that I showed, the maximum width of the triangle, project that width from the point of breakout, that is one of the most widely used method for projecting targets for any kind of triangle. So now that we have learned about nature of triangle, the place where prices ideally broke out of a triangle consolidation pattern, how to project price targets for breakout, and how volume behaves within a triangle. Now that we have learned everything about triangles, let's go ahead and learn types of triangle. There are three main types of triangle: symmetrical triangle, ascending triangle, and descending triangle. Of these three triangles, symmetrical triangle is the only triangle that do not hold a trend direction bias, which means if prices are forming themselves, setting up themselves into a symmetrical triangle, it does not hold any direction value, whereas an ascending triangle is generally considered a bullish triangle and a descending triangle is generally considered a bearish triangle. Basically, ascending and descending triangle are mirror images of each other but having different trend direction implication, whereas symmetrical triangle is actually a neutral triangle. So our first triangle is a symmetrical triangle. The symmetrical triangle is usually a continuation pattern. Characteristics of symmetrical triangle is two converging trend lines. Both trend lines converge at almost same degree. A symmetrical triangle is truly a non-directional consolidation pattern. Direction of trend is determined only through breakouts. We have seen this example or we have seen this diagram before. This is how a symmetrical triangle looks like. It has two converging trend lines and both trend lines converge at almost similar degree to look like an actual symmetrical triangle. Following is a chart, a daily chart of IDFC, and on this chart, take a look very careful at this chart and make a guess if you can identify a symmetrical triangle. Forget about a symmetrical triangle. Just make sure that can you identify a congestion area or a triangle. Alright, let's go ahead and first evaluate the direction of price move and what volume suggests us about direction of price move. Alright, first we will evaluate the direction. You can see here spike in volume supporting spike in price. it will be safe to assume that prices are looking to go upwards, which is again confirmed by this increase in volume every time prices go upwards, thus making us believe that prices looks like they want to go upwards. All right, every time prices falls, volumes contract. You can see here. So here prices fell down on lighter volumes. Even here, every time price made an upward move, volume tend to increase. All right, here you can see there are 2 points available through which a trend line can be traced out. 2 points for upper trend line and 2 points for bottom trend line. Thus we have point A, point B, point C, and point D. The trend line you can see are converging at almost same degree, and overall triangle looks like a symmetrical triangle. First extend this trend line and draw straight line. You can see the triangle thus formed looks like a symmetrical triangle. Thus the name is given that this triangle is a symmetrical triangle. Now one of the most important point to be noted about a symmetrical triangle is it does not hold value towards direction. You can see here, before prices entered into this triangle, prices suggested that they are willing to go up. Every time prices went upside, volume increased. But once prices entered into this triangle, all right, you can see here volume showed displayed a tendency to increase when prices were falling. Once prices start going upwards, volume trend showed a decreasing tendency, and when prices fell here on these 2 days, you can see here prices increased. I'm sorry, volume increased. So once prices enter into a symmetrical triangle, the importance of volume to show direction decreases, as symmetrical triangle is not really a direction biased triangle, it is a neutral triangle. So the direction of price can only be considered when prices break above the trend line, which happened on this day. Prices broke above the trend line and gave a strong close, thus confirming the fact that prices are moving upwards. So a symmetrical triangle is a continuation pattern. Characteristics of triangle is two converging trend line. It is a non-directional consolidation pattern. Direction of trend is determined only through breakout. Now that we have learned about symmetrical triangle, let's go ahead and learn about ascending triangles. Ascending triangle is a variation of symmetrical triangle but has a different forecasting implication. In an ascending triangle, the upper trend line is flat, whereas lower trend line is rising. Ascending triangle is generally a bullish pattern. An upside breakout in ascending triangle should be accompanied by increase in volume. Sometimes a return move to the trend line is seen. If there is a return move, then it should be on light volume. Sometimes ascending triangles are formed at bottoms, suggesting that downside move is over. Even at the bottom, its implication remains the same. If there is an ascending triangle into formation, then it is safe to assume that it is a bullish pattern and breakout will be towards the upside. Measuring technique for ascending triangles and interpretation of volume. So the measuring or forecasting of price targets for an ascending triangle is simple and similar to how we forecasted for symmetrical triangles and triangles in general. Measure the height of triangle at its widest point and project that vertical distance from the breakout point. Volume. Volume pattern is similar to that of a symmetrical triangle. Volume diminishes as pattern works out and increases on breakout. An ascending triangle is a bullish pattern. Within the pattern, volume would generally pump up on upside move and decrease on downward moves. Following is a diagrammatic representation of an ascending triangle. Basically, this diagram is to tell you this is how an ascending triangle should look like. It has a flat top, which suggests that prices are finding resistance at almost same level, whereas it has a rising bottom, suggesting that prices have rising bottoms, but their tops are not rising, thus leading to a formation of an ascending triangle. Once prices break out to a new high, this breakout should be accompanied by a heavy volume. For projecting price targets, measure the widest part of the triangle and project that from the point of breakout towards the upside. So this is your target. So let's go ahead and see a real chart example. Following is a daily chart of Adore Weld. It's a welding manufacturing company situated in Mumbai. As of the last bar, it looks like the pattern is forming itself into an ascending triangle. As you can see, prices started an uptrend, increasing volume every time prices made a new high, which is a very good example of an uptrend. Then prices pulled back on almost dried up volume, which is also a very good example, suggesting that prices are not willing to sell themselves down on heavy volume. Every time there is an upside spike, there is a spike in volume too. Alright, prices found resistance at the level of 150 once, and then they started consolidating in a range from 150 to 120. And if you were to closely consider prices within this range, every time prices went up, volume increased. Every time they came down, volume dried up. Every time they went up, increase in volume. Not so strong as this one, but still there is an increase in volume every time prices go upside. Alright. Now we can see prices have found resistance at 150 twice. But if you were to look at the bottom, you can see bottom are have a tendency to rise upwards, thus giving a formation, a kind of ascending triangle. Now the other qualities of ascending triangle applies to this pattern, that is volume is increasing every time prices try to move upside and volume is decreasing or drying up when prices move downwards, suggesting that prices still have tendency to go towards upside. That is one point. The other point is an ascending triangle is a bullish pattern. So in order to confirm this ascending triangle, prices have to break towards the upside. Let's go ahead and add some bars. Now if there is a breakout, you must know that breakout must take place on heavy volumes. So we'll add some bars. As of the last bar, prices broke to new high on extremely high volume. So this was indeed an ascending triangle, and that breakout and strong close above the triangle is confirms the fact that this was an ascending triangle. Now let's go ahead and project our price target for this triangle. There are two methods to project price target. First one is to measure the widest range of the triangle and project it from the point of breakout, that is from 150. So according to the widest range, 182 is the target. Second way to project A price target is to draw a line that is parallel to the lower trend line and project it from first point, that is point A. I have projected it and now I'll extend it a bit. Alright, so as per the parallel line, target is somewhere between 175 to 178. As per the widest range, target is somewhere between 182. Remember, in order to calculate using a widest range, all I have done is taken the widest range of the triangle from point A to point B and then projected it from the point of breakout, that is from here. This is where the prices broke out to new high, so I projected it from here from 150. Let's go ahead and add some bars. You can see prices met both target, that is the parallel line and 100% projection as well. So you can use any method that you like. Our next pattern is a descending triangle. The descending triangle is a mirror image of an ascending triangle and is generally considered a bearish pattern. This pattern indicates that the sellers are more aggressive than buyers. Breakout is generally to the sell side. Sometimes descending triangles forms on top. No matter where they form, their implication is same. The sell signal is registered by a decisive close towards the downside. The volume pattern is similar to that of an ascending and symmetrical triangle. Volume diminishes as pattern works itself out and increases on breakout. Descending triangle is a bearish pattern, so within the triangle, volume will pump up on every down move and diminish on up move. This is how a descending triangle ideally looks like. It has a flat bottom, whereas a falling top trend line. A flat bottom, a falling top of trend line. Price projection for descending triangle is similar to ascending triangle and symmetrical triangles. Following is a daily chart of Andhra Bank for the year of 2013 and for the month of May. As of the last bar, you can see Andhra Bank is finding support at the level of 90, but take a look at the tops. You can see it has a diverging or falling tops, whereas it is making flat bottoms, thus giving us a descending triangle. From here we will project a line that this looks good. Now it is safe to assume that it looks like this is forming a descending triangle. Let's analyze volumes. Upward move is being made on lighter volumes. Every time prices move downwards, you can see volume tends to increase. When you hear down move, increase in volume. So the pattern suggests that we should expect a breakout towards the downside. We'll go ahead and project. Let's wait for the breakout first. Let's go ahead and add some bars. Upper trend line is acting as a resistance. This is a decisive close below the level of 90 or below the flat trend line, suggesting that descending triangle pattern is completed and breakout is given on fairly higher volume, supporting our view that prices will move down longer. Let's go ahead and project price targets. We could take this spike into consideration while projecting price target, but I don't know if this spike is really a true spike or just if prices really traded to the level of 110 or it is just some spike. So instead of taking that, I will take this top as my point to calculate the widest range. I'll go ahead and Calculate the widest range here and project it from the point of breakout, that is here. 75.14 is my target, initial target for this breakout pattern. Let's go and add some bars. There we go. Prices went ahead to meet the price target. The important point to understand is displayed every quality of a descending triangle. It had a flat bottom and a falling trend line or falling top line. If we were to analyze the price movement with volume suggested that prices are more stronger on the downside as compared to the upside. Breakout was made on heavy volume, and you can see here prices pulled back to the trend line. Price made a high of 89.7, pulled back to the trend line, and this pullback, we will zoom inside, this pullback was on lighter volumes, suggesting that upside move has no strength left in it and prices are going to move downward. Our next continuation pattern, flags and pennants. These are one of the most exciting, most interesting continuation patterns after triangles. The flags and pennants represent brief pauses in a dynamic market move. One of the requirements for both flags and pennants is that they be preceded by a sharp and almost a straight market move. They represent a situation where a steep price move is trying to catch its breath before resuming its trend journey. They are one of the most reliable patterns and rarely produce a reversal. A flag resembles a rectangle marked by true trend lines that tend to slope slightly against the prevailing trend. A pennant is formed by two converging trend lines and is more horizontal. A pennant resembles a small symmetrical triangle. One of the most important requirements is that volume should dry up notably when prices is forming either flags or pennants. This is how a flag pattern looks like. There is a sharp upside move followed by a consolidation. These consolidation can be marked by two parallel lines, and when prices enter consolidation, volume dries up. Sharp up move has higher volume, and once prices broke above the flag, volume burst up considerably. This is how a pennant formation looks like. The volume pattern for flag and pennant is same. Both should be preceded by sharp upside move. A pennant looks like a small symmetrical triangle, which is followed by a continuation of the previous trend. Important points to remember. They are both preceded by an almost straight upward move on heavy volume. Prices then pause for about 1 to 3 weeks on light volumes. This is very important. Remember, a triangle takes almost 1 to 3 months for completion, whereas flags and pennants are really short-term patterns. They takes no more than 1 to 3 weeks for completion of their. The trend resumes on burst of trading activity. Both patterns occur at about the midpoint of market move. The pennant resembles a small horizontal symmetrical triangle. Flag resembles a small parallelogram that is sloping against the prevailing trend. Both pattern takes less time to develop in downtrend. This is also very important. If market is suffering a downtrend, both these pattern will take shorter time period in their formation. Both patterns are very common in financial markets. Following is a daily chart of Britannia Industries for the month of October 2014. As of the last bar, you can see prices are consolidating. Prices are taking breath after a very strong upside move. Last breather for prices came in this range here. After that, prices resumed their upward trend from this point till this point. So prices have pulled back and have started taking breath before they considered to resume the uptrend. This does not look like a rectangle or triangle, but it does look like a flag. You can see we have 2 points here, point A and B. Similarly, we have 2 points on the downside, C and D. And if we draw trend line from both these points, you can see it does look like a fair kind of a flag in middle of a trend. All right. You can see when prices were suffering, when prices were going through a trend, strong trend, this strong trend was supported by increasing volume. Once prices entered consolidation, volumes dried up with a small spike here and there. Okay, so once prices break out of the flag, volume must increase. That is the rule. Let's go. As of the last bar, it looks like close is somewhere on the line of trend line. Let's go and add a bar. We want a decisive close above the trend line. As of the last bar, we can assume that the flag pattern looks like it has completed itself. Volume is higher than its previous day and much higher than what we had seen when prices were in consolidation mode. So as of the last bar, it looks like the flag pattern is completed. We'll go ahead and project our price target. Target projection is similar to what we did in triangles. Take the widest range and project it from the point of breakout. 1581 becomes our price target for Britannia. Or another way of projecting a price target is to take the range of previous uptrend, and project it from the point of breakout. Alright, a flag or a pennant, it is said, happens in the middle of the trend. So if this flag is the middle of the trend, then the trend should replicate its previous up move, which is from 1200 to the level of 1511. High is 1511. So the upward move should replicate this move. So I will mark it from the point of breakout. So our new target is 1667. Let's go ahead and add some bar and see if our target is met. There you go, our target is met. And you can see once prices resumed its upward move, volume increased considerably. Our next example is also of Britannia industry, a daily chart. As of the last bar, you can see prices have broken out of what looks like a pennant. When prices were trading into this pennant range, volume had dried up, so giving a higher volume on downside price move. Alright, but it does look like a pennant. It is very small to be considered as a symmetrical triangle. Remember, a symmetrical triangle requires at least 1 month and at the most 3 months for its formation, whereas this pattern has formed itself within 2 to 3 weeks, which is ideal for formation of a pennant. As of the last bar, prices have broken beyond the trend line of pennant on heavy volume. So we will go ahead and project price target for this pennant. Pennant also forms in the middle of a trend. Previous price range was from this bottom to this top. So we will take this price range and project it from the point of breakout. And I'll project it from the point of breakout, that is this point. So my new price target is 2100. Let's go ahead and add some bars and see if this pennant meets our required price target. Anticipated price target, sorry. Well, it did not meet our anticipated price target, and eventually it started consolidating. It went till the point of 2000 and started consolidating. So in that case, we could have used an alternate price projection, that is the distance of the range of pennant, and project it from the point of breakout. If we were to take the range of pennant and project it from the point of breakout, price target was met at 2004, whereas our projected price target of previous trend was never met. Nonetheless, it did turned out to be a positive trade. Even if we were to trade using a 2 bar low stop, we could be stopped out at the range of 1920. It is still a good price target after entry at 1840. So we'll go ahead and once again revise important points that we must remember while trading flags and pennants. They are both preceded by an almost straight upward move on heavy volume. Prices then pause for about 1 to 3 weeks on light volume. Trend resumes on burst of trading activity. Both patterns occur at about the midpoint of market move, which means once prices break out of this flag or pennants, the price range the price move that must come after breakout should be equal or is generally equal to the price range that preceded the formation of the pattern. When it resembles a small symmetrical triangle, whereas a flag resembles a parallelogram that is tilting in the opposite direction of the trend, both patterns take less time to develop in downtrend. Both these patterns require at least 1 to 3 weeks. Alright, both these patterns need 1 to 3 weeks, whereas triangles need at least a month, 1 to 3 months for their formation. Both patterns take less time to develop in downtrend, and both patterns are very common in financial market. Our next pattern is a rectangle. A rectangle represents a pause in trend during price move sideways between two parallel horizontal lines. It is also referred to as a trading range or a congestion area. Prices usually break out of the rectangle in the direction of previous trend. A decisive close outside either the upper or lower boundary signals completion of rectangle and points the direction of the trend. Following is a diagram of a bullish rectangle in an uptrend. It is also called a trading range or concession area and shows prices trading between two horizontal lines. Prices move upwards, find two points of trading range where a horizontal straight line can be drawn through. After trading in the range for some time, prices break out to new high and continue its upward move. Similar and exact opposite is the case for a bearish rectangle. Prices come falling downside, then find 2 points of resistance and support where they consolidate for some time before breaking down and resuming its downtrend move. Importance of volume. One important clue to watch for is a volume pattern. Since price swings in both directions are fairly broad in a rectangle, analysts should keep a close eye on which moves have heavier volume. If the rallies are on heavier and setbacks on lighter volume, then formation is probably a continuation in an uptrend. Heavier volume is on downside, then it should be considered a warning of possible trend reversal in work in an uptrend, which means if you have found a triangle pattern formation in an uptrend, and within the triangle, if rallies are supported by strong volume, then all is good with the uptrend and the trend will resume once there is a breakout above the resistance point. But if you find a triangle in an uptrend and volume are heavy on downside move within the triangle, then an analyst must be alert that this could be either a double or triple top and prices might reverse their direction. Since a rectangle has a fairly broad range, it is possible to trade the swings within a rectangle pattern by buying near the bottoms and selling at the tops. This technique enables a short-term trader to take advantage of well-defined price boundaries. If the trading range remains intact, then the counter trend trading approach works quite well. One can take help of oscillators to take trades within this range, but oscillators are less helpful once prices break volume and other important factors. Since a rectangle has a broad trading range, volume activity does not completely dries up, but volume pattern for a breakout does apply. When prices break out of this consolidation pattern, sometimes a reversal move to the trend line is also seen on lighter volume after breakout. Target measuring technique is similar to the technique discussed for triangles breakout. Following is a daily chart of Cipla Industries, and as of the last bar, you can see prices have found a trading range of 460 towards the upper side, 430 towards the lower side. We were to analyze its previous uptrend move was supported by increasing volume every time prices made a new high. Once prices entered consolidation, volume fairly dried up, but nonetheless, volume increased every time prices made higher moves, and volumes decreased every time prices pulled back, suggesting that the bias, or even within this trading range or triangle, the bias is towards the upside. Even as of the last bar, you can see volume is increasing as prices are moving towards the upside. So we will wait for a breakout. Let's add some bars. As of the last bar, prices have broken above the rectangle formation. Let's go ahead and project price target. I'll take the widest trading range of this rectangle. Use crosshair. Take the widest trading range of the rectangle. Project it from the point of breakout here. Alright. So my projected, as of the last bar, prices have closed. Just uncheck it. Closed at 471, and my projected target is 500. Right. So let's go ahead and add some bars. Projected target was met and prices went straight up, thus resuming its straight upside move. It's going to add some bars. Up move was way larger than what we anticipated. So a rectangle represents a pause in trend during prices move. So during a rectangle, prices move sideways within the horizontal parallel lines. This rectangle is also known as a congestion or a trading range. Prices usually break out of the rectangle in the direction of previous trend, as we saw in the chart, and a decisive close outside either the upper or lower boundary signals completion of the rectangle. Our next and last price pattern in our series of continuous pattern is continuation head and shoulder pattern. Head and shoulder pattern is said to be one of the best and most trustworthy of reversal patterns. But head and shoulder pattern sometimes appear as a continuation pattern. Not always a reversal, but sometimes they appear as a continuation pattern also. A continuation head and shoulder pattern looks very similar to a sideways rectangular pattern, except that the middle throw in an uptrend tends to be lower than either of the two shoulders. In a downtrend, the middle peak in the consolidation exceeds the other two peaks. Following is a diagram of a bullish head and shoulder pattern. You can see prices are moving on the upside Then they find pause, the pause that looks like an inverted head and shoulder pattern with left shoulder, head and right shoulder, and a fairly drawable neckline. Once neckline is broken, prices continue their upside movement. Our next chart is a bearish head and shoulder pattern. Prices are moving downside. Then prices find pause where they make a formation like left shoulder, head and right shoulder, and a fairly drawable neckline. Once neckline is broken, prices resume their downward movement. Alright, following is a daily chart of Hero MotoCorp. You can see prices are displaying an uptrend. As of the last bar, prices have entered consolidation and the pattern does look like an inverted head and shoulder pattern in a bullish upside move, where volume support upside move. You can see here every time there is an upside move, volume have tendency to increase. All right, the pattern is quite fairly visible like an head and shoulder pattern where we can identify left shoulder, head, right shoulder, and we can also draw a neckline from this point to this point. Now, what is the rule? The rule is if prices break above the neckline, the breakout should be on higher volumes. All right. And what is our target method? Target method still remains the same. Take the widest point of head and shoulder pattern, that is from this point to this point, and project it from the point of breakout. We are yet to see a breakout, so we'll for now delete it and add some bars. Here you can see prices have closed above the trend line, but we need a decisive close. We need a close that really helps us or strongs us our view that prices are now going towards upside. Though this close is very important, as you can see, it was made on fairly higher volumes. Okay, suggesting thus confirming our bullish view. Volume is confirming our bullish view. Let's go and add some bars. This can be said as a decisive close, as close was on extremely higher volume and it went up, came down, but it failed to close below the trend line. This can be an important close. Now we'll go ahead and project our price target for this pattern. Project it from the point of breakout, that is here. So our target is 2899 or 2900. Let's go and add some bars. You can see prices are going up on increasing volumes. Add some bars and our target was met. Not only target was met, but prices continued its upward journey. Alright. So the only difference in head and shoulder pattern and inverted head and shoulder pattern or continuation head and shoulder pattern is the time taken for the formation, where a continuation pattern takes lesser amount of time for its formation. A reversal pattern takes a large time frame for formation. Okay, a continuation pattern requires somewhere between 1 to 3 months, whereas a reversal pattern requires at least 3 months for its formation. Even then, short-term patterns like flag and pennants require fairly short period like 1 to 3 weeks for their formation. So that concludes our current tutorial on continuation patterns. We learned about triangles, how to identify triangle, what each triangle means, how to find price targets for them, and how to interpret volume activity. Then we learned about rectangles, how to identify rectangle. Then we learned about flags and pennants. And lastly, we learned about continuation head and shoulder patterns. Thus, we have learned about important continuation price pattern and how volume confirms their formation. A reversal testing move after breakout usually occurs, but sometimes when market is under pressure, breakout tends to be strong and no reversal move occurs. As you can see in this chart where a continuation head and shoulder pattern took place, a reversal move to test the trend line never occurred. Because the market was in a strong uptrend, a reversal move never took place. This concludes our treatment of continuation patterns. Thank you.